I mentioned this at the top of the show. U.S. Department of Agriculture recently released the latest cattle on feed report. Now, that report showed that heifer retention is not yet increasing, delaying the much anticipated rebuilding of the herd. Our focus of the markets this week is on the livestock complex, and joining the show was UNL Livestock Analyst Elliott Dennis.
Yeah, really it was the marketings that really kind of kept things in line, about 92%. Everything else was a little bit lower than pre-report estimates, such as like July 1 cattle on feed. People thought it was going to be a little bit higher than it was, came out a little bit lower. But here in Nebraska, we haven't seen huge movements because a lot of those places where it pulled it down lower were from smaller states, with the exception of kind of Colorado. But like Texas, Nebraska, we were at 103% of last year's, and so that's why we didn't see a huge amount of movement. More of the conversation has really been shifting towards the percentage of steer heifer mix. Really, it's still at a higher level, around that 38, 39%. And so really kind of leading to, comments of, we're not having herd rebuilding, and kind of leads into, that importance of that July report that we normally get.
Yeah, let's talk a little bit about that. You're talking about the July inventory report. We get that report twice a year, once in January, the other in July. But USDA this year, due to budget cuts, I understand, so they're not publishing that. Shed a light on that topic for us.
Yeah, so this really came about in April, saying that we're not going to publish this. So they did give the industry some kind of, preview of what wasn't going to happen. But really, the July inventory report is really important because it gives us kind of state by state, and really it's our first look at calf crop. So this kind of gives our spring report of where the calf crop is, and really allows us to do things like, beef heifer replacement and, stocker inventory and stocker intensities. And so what is that rate or number of cattle outside of feed yards? That kind of gives us a buffer. That's the big thing that's going to be that goes away. And even in the January report, we know that the number of states is going to go down from 50 to 31. So kind of that coverage of where we're at in the U.S. is going to go down, and really leads us to, as economists and people in the industry, we have to start making assumptions. But they have come on and off with this report sometimes, so the hope is that, if there's enough kind of industry involvement that, we'll come back on again.
Well, let's talk broadly about cattle prices. So we look at the live and feeder cattle markets on the board, but also what's getting a lot of attention right now is the video auctions and some of the hot prices we're seeing out there.
Yeah, so really on the live cattle side, as you mentioned, the cattle on feed report was pretty uneventful. We saw things kind of trade up and down $1, but really in that October market, we're trading in that 182 to 187. The December market and the February market were a little bit higher. That upper range is at the 191, 194, but really kind of what we're thinking is what is going to move that market higher, right? So there all has to be, some sort of combination between consumer demand pulling that up, or some supply favoring those prices to go a little bit higher. But Labor Day is our last big day of the month, or of the summer, so we'll kind of see where that's at. And as we know, school starts in a couple weeks for most of the U.S., about 3 weeks, so definitely going to be a reduced kind of demand there. But really, the feeder cattle market is kind of where all that leverage is at, and we're talking about, in Nebraska here, we're talking about basis level is at plus 80, plus 90, which is really crazy. And we talk about the video markets, we're at the for weaned, non-programmed cattle, we're anywhere for fall delivery of this year, we're at anywhere between 320 and 340. So if we add that to where we're at in that October-November contract, we're at, plus 80 or plus 50 to plus 80 basis. So we could see 340 prices going into the fall cash prices. And really what we're looking for is that future is going to probably come up to meet the cash. So that basis is going to narrow, but I'm expecting kind of in that, 320 to 340 range as well for the cash price in October.
Historic times as we continue to highlight the cattle industry.
Yeah, absolutely. Yeah.
Something that caught my attention that I wanted to ask you has to do with box beef prices. In particular, choice lost $8 last week as we look at how that finished. What does that tell you about the demand situation?
Yeah, I think you got to put it in perspective. When we look at the index, the choice index, we were already breaking basically seasonal trends. We should have been going down. Instead, we were going up. So I view these kind of sharp corrections down as more just starting to come in line with more we were at in kind of the seasonal projections. And then really what's been carrying, a lot of this market has been the 90% lean. I mean, we are skyrocketing at that $3.50 on 90% lean. So some of these middleweights have been kind of struggling, but really lean product or ground beef has really shown continued high demand, and that's what's been pulling up a lot of the cutter cow prices and why we haven't seen a lot of herd rebuilding, because there's a lot of value and people are trying to recapture that value of just poor prices and poor markets over the last couple of years.
Okay, just about 30 seconds left here. As you continue to look at maybe the quarter ahead when it comes to the cattle industry, what are maybe one or two of the factors you're keeping a close eye on?
Yeah, I'm still looking at the coal slaughter, because that is going to be our primary driver. That's the way that we actually get feeder cattle born into next year. So that's the number one thing I'm looking at as we go into the fall, especially with higher 90% lean and a lot of people just trying to retain value in the market.